Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. Today, we're diving into Semler Scientific's latest report to see if this company went from hero to zero, or if there is a hidden gem in the numbers. Alright, strap in. Because things just got a whole lot more interesting for Semler Scientific. This is the announcement that a big acquisition happened, and it's a pretty big deal for this company. So, the big news here is that Semler Scientific has been acquired by Strive Incorporated. This officially happened on the 16th of January 2026. Think of it like this merger, where Semler Scientific essentially became a part of Strive. This is a filing that tells us all about this major change. It's a Form 8K, which companies file when there are important non-routine events. And this acquisition is definitely a major event. The company itself, Semler Scientific, is now a wholly owned subsidiary of Strive. This means Strive is the parent company and Semler Scientific is the child company, so to speak. Before the acquisition, Semler Scientific's common stock was traded on the Nasdaq. Now that it is being acquired, that is all changing. This part explains the nitty-gritty of how the deal went down. Strive, through a subsidiary called MergerSub, merged with Semler Scientific. The main takeaway is that Semler Scientific, as an independent public company, now operates under Strive. This acquisition was first agreed upon in September of 2025 and then finalized in January of 2026. Now, let's talk about debt. Back in January of last year, Semler Scientific had already raised a significant amount of money by selling what are called convertible senior notes. These are basically loans that can be turned into stock under certain conditions. They raised $100 million with an interest rate of 4.25% due in 2030. This is where it gets technical, but the key point is that the terms of those convertible notes have changed because of the acquisition. Holders of these notes who could have previously exchanged them for Semler Scientific stock can now exchange them for Strive stock. Strive has also guaranteed these notes, meaning they've promised to pay them back if Semler Scientific can't. And importantly, that full $100 million in notes is still out there, meaning Semler Scientific still owes that money. This section explains when people holding these notes can actually turn them into stock. It's not just any time. There are specific conditions, like if Strive's stock price goes up by a certain amount for a certain number of days, or if the stock price drops significantly, or if Semler Scientific decides to buy back the notes, or if specific company events happen. After May of 2030, they can convert them pretty much any time. This part talks about what happens if things go wrong. It outlines what counts as an event of default for these notes and what can happen if those defaults occur. This usually means that the loan can become due immediately. For example, if they miss an interest payment on the notes for 30 days, that is a default. Another big one is if Strive or Semler Scientific defaults on other major debts, especially those over $15 million. If those other debts become due early because of a problem, it can trigger a default on these notes too. This shows how issues with one debt can cascade and affect others. And of course, if the company or its subsidiaries faces bankruptcy or serious financial trouble, all the money owed on these notes becomes due immediately. This is a less dramatic but still important point. Semler Scientific had an agreement in place to sell shares of its stock in the market, kind of like a continuous fundraising effort. With the acquisition complete, that agreement is now terminated, meaning they won't be selling any more shares this way. Here is the big payoff for Semler Scientific shareholders. If you owned Semler Scientific stock before the deal closed, each of your shares was converted into the right to receive 21.05 shares of Strive's common stock. This is a direct exchange. And it tells us the valuation that Strive placed on Semler Scientific. This explains what happened to stock options that employees or directors held. These options were also converted into options to buy Strive's stock, generally keeping the same conditions. There are some special rules here about vesting accelerating if certain people, like non-employee directors, still continued their service, or if someone was terminated without cause shortly after the merger. This is the official end of Semler Scientific as a publicly traded company on Nasdaq. They notified the stock exchange that they are being removed. Trading of their stock stopped at the end of the day on the 19th of January 2026. And they are now working to get their stock deregistered from the CC. This is a typical step after a company is acquired. This section simply confirms that a change of control has indeed happened, and Semler Scientific is no longer its own master. It's now part of Strive. Here is a look at the leadership changes as expected after an acquisition. The old guard stepped down. The directors and officers of the acquiring company's subsidiary took over. So the previous leadership team, like Eric Semler, is out, and new people from Strive's side, like Matthew Cole and Brian Logan Bann. are now in charge of the operations of the surviving Semler scientific entity. This is a list of exhibits, basically attached documents that provide more detail. It includes the merger agreement itself, amendments, and the supplemental indenture for those notes we talked about. These are the official legal documents backing up everything that has happened. So, what is the big picture here? Semler Scientific has been acquired. For its shareholders, this means they traded their Semler Scientific shares for Strive shares at a set ratio. For its bondholders, their debt is now effectively guaranteed by Strive, and the conversion terms have been updated to reflect ownership by Strive. The company itself is no longer independent and will operate as a subsidiary. What does this mean for the future? Well, Semler Scientific as a standalone public company is gone. Its fate is now tied to Strive's performance. The value for the shareholders will depend entirely on how Strive does moving forward. For the debt holders, the risk is now linked to Strive's financial health. The main risk here is always the integration of the acquired company into the parent. If Strive can leverage Semler Scientific's assets and operations effectively, it could be a win-win. But if the integration is rocky, or if Strive faces its own financial challenges, it could spell trouble for the debt holders and the new shareholders. Alright, that is our breakdown of Semler Scientific's acquisition filing. What is your take on this merger and what it signals for the companies involved? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.